Hello again and welcome to Ask Jane. Today I have with me Matt Latham from Just, and we're going to have the question, why launch a Just for You green lifetime mortgage, and what are the benefits and where will it take us? Hopefully you can answer that for us, Matt.
Hi, Jane, and thanks once again for inviting me on. So yeah, we've just launched our green lifetime mortgage. It is innovative. I think we're looking to see really what we can do with it. So it's as embryonic really for us as it is for anyone else in the market. There hasn't been anything that has been launched, but I suppose in a nutshell, what we're doing is we're saying if you can prove that your house is energy efficient and is environmentally friendly, then on some of our products, our new J 2.5 product, we will actually give you a rate reward for having a house like that. So yeah, it is a new one. I think it actually probably does go hand in hand with the recent announcement of the new Green Homes grant that was announced last month, which is due to come in later on the year. I think it's September time, which might actually encourage more and more people to investigate how they can make their houses more environmentally friendly and energy efficient, reduce their costs, and actually improve their homes. So that's, I suppose, in essence, what we've done.
Well, it's very different. I think first of all we need to perhaps explain that you do need an EPC, and perhaps you'd like to explain what that actually covers.
So the EPC is an energy performance certificate. So I suppose it's just like a report, like a school report, giving you a grade on how efficient your house is. The energy performance certificates have been around since August 2007. So you'll remember in 2007 they brought in the home information packs. And home information packs were designed to give information about a property for anyone who was going to rent or buy and sell a house. So since 2007, they have all houses that have been bought, sold, or rented should have a home information pack. And the EPC, the Energy Performance Certificate, is part of that. Now, the Energy Performance Certificate itself lasts for about 10, well, they're valid for 10 years. So any of your clients that have bought, sold, or rented a house within the last 10 years should have an EPC already on that property. And you can actually access an EPC register to actually find out if there is one that's valid. So there is a government website that has a registration of all the EPC certificates that are actually out there already in the UK.
Well, I didn't know that, so that's useful information. At what level of EPC do you require to qualify for this product?
Okay, so an EPC will range a house or rate a house from A through to G. A being the most energy efficient and the most environmentally friendly, down to G, the least energy efficient and the least environmentally friendly. Now, to qualify for our rate reduction on our green lifetime mortgage, you would need a rating of either A or B. So they are at the top end. So yeah, if you've got one already, then actually yes, you can access that product already. Now you can get an EPC certificate yourself anyway. They are around about £50, just under.
Yep.
In some cases, I've seen them for £40. But what we will do as actually part of our new product is if you can satisfy our requirements, having an EPC of either A or B, then actually we will refund you and give you a £50 cashback upon completion for the trouble as well. So not only will you get a rate reduction, but we'll actually pay for the certificate. If you've already got the certificate, then actually that's another freebie.
That sounds very good. So obviously you could, if you bought a property, perhaps it was grade C or D, and you've done some improvements like roof or cavity wall, you could obviously reapply then, couldn't you, to see if your property was then up in the A or B category.
Yeah, absolutely.
So
And
it's not.
oh, sorry, Jane.
It's all right. Carry on.
Well, and I was about to say, not forgiving, I suppose, those new green home grants. They could make a significant difference. I mean, they're up to £5,000. So as far as insulation, cavity wall insulation is concerned, they could make a big difference for a property that is far lower down
Mm.
the energy performance certificate rating as it stands right now.
So what was the thought process in offering this new green lifetime mortgage, and why not on the whole range, just on the J 2.5?
Yeah. Well, I think we wanted to find out to see how significant it would benefit, our clients, and just to find out, I suppose, what size of the market is. So I don't. It's not going to certainly benefit everyone at this moment in time. But with the way that properties are becoming more energy efficient, certainly newer properties are,
Mm.
and with the government helping and assisting people to improve the quality of their homes, then actually we do expect more and more. And actually, it's a feature that we could expand to any of our other products. So at the moment, I suppose we're just seeing where it sits. And I think, if you have someone who is taking the time and effort to improve their house, reduce costs, that makes the house more attractive for the next sale or purchase. And in fact, if it's environmentally friendly, then actually there's a moral obligation. And actually, we don't see that there's any issue. That's not a bad byproduct of what we're trying to do right now.
That sounds really good. So you're not only going to help with the £50 contribution, but what is the benefit on the rate?
It's a 10 basis point reduction on the rate itself, which might not seem a lot at this moment in time, but as you'll know, on the overall cost of borrowing, that could make a significant difference over a 20-year period. So yes, it would have a 10 basis point reduction, and it's on our J2.5 product, which is already, I suppose, at the lower LTV end of what we got, and therefore at the lower one of our lower rates for our product range.
I did actually compare a £100,000 loan over the 20-year period, and by using this green product, you actually save £4,000, which is equivalent to £200 a year. Or
Yeah.
if you were paying the interest payment, it would actually save you over £8 a month. So it is quite significant, to be honest.
Absolutely. And actually, you mentioned the interest payments. Of course, the interest payments as well, having specific interest servicing on it as well, you get additional rate reductions. So actually, yeah, there's a number of different, I suppose, rewards. I'm not sure if reward is the right word, but if we can encourage people to have better consumer outcomes by improving consumer behavior, then actually, yeah, that's going to benefit us and the consumers. There's no problem there.
Do you have any idea what percentage of homes you anticipate will qualify for this? I mean, I did a bit of research, and obviously existing property in the Q4 2018, there was very few qualified in the A and B category. But obviously since then, 246,000 new homes in 2008.
Yep.
And out of that, category A was 1%, category B was 83%.
Yes.
And that was up 11% from 2017. So I suppose the target is new build, and then obviously, as you've mentioned, reward people if they were to do additional work through the grant process, possibly to improve their homes.
Absolutely. I mean, I think that's quite an important part. And people do need to investigate whether or not they can qualify for it first and foremost. And if they do, then brilliant. And you're absolutely right with new homes and maybe some of the retirement properties that we are seeing. But there are a number of developments of retirement properties and age-restricted properties that we are also able to consider. So yeah, anything like that. And I suppose the real win would be for those people who actually already have one, that are already there, it's already registered, that actually it's coincidental that they're coming to you guys to see what the best deals in the market are. If they've got one already, then they'll really benefit from that without actually having to do anything. And if the register has access to all of that already, then it's free to find out and it's free to play.
So really the overall winner is the environment, which we're all trying to improve.
Yeah, I think we all have a moral obligation to help out where we can. This is the first innovation of this kind in the market. Now, we do hope it's going to add real value and benefit to some people, and we do hope that it encourages more people to try and find ways to improve. And with this and the government Green Homes Grant, well, why wouldn't you want to investigate if you're in the right circumstance?
Most definitely. Well, thank you for all that. Now, this leads me on to your standard J2.5 range. Why did you feel it was necessary to put another level of loan to values in your product range?
Okay, well, we had a product range of J1, 2, 3, 4, and 5, and we consistently and continually monitor our products just to ensure that they can help as many people as we want to. And what I think we discovered is that there was a gap between our
Mm.
J2 and J3 products. So our loan to values, it was probably the broadest gap, and our rates were the broadest gap. So it made sense that if we were going to try and help more people, that actually that was the area that we needed to come into. So J2.5 was the product that we came up with. And ultimately, what we're looking to do is we know that one size does not fit all for clients. And you know this as well in the lifetime mortgage market is they're very specific clients with very specific needs. So the more solutions we have, the more solutions will be appropriate for the customers and the clients that are coming to you and your members.
It's quite interesting actually because I did do a comparison on the 100,000 again, and on the J2 it was 3.37, and over 20 years it was 194,000 roll it. On the J3 it was 4.57, and over 20 years it was 244,000. So that's obviously £50,000 difference.
Yeah.
So your J2.5 actually sat in the middle at a rate of 3.84, and the roll up was 212.
Yes. So what you'll find with any introduction of a range for us is that actually that will help some people that have had to go up to the next level
Mm.
come back down again. So it will only improve consumer detriment. We can't help people who are at the lower levels increase, but we can actually put different levels in for people at a higher level to decrease if they find it appropriate. So yeah, no, the consumer outcomes are one of our main thoughts there.
Yeah, I mean, those three products are very popular, I have to say. So, how do you think this compares against the market as a whole?
Um, Well, there's a number of different options out there in the market, and having worked in the mortgage market for a number of years, it's one of the things that we do get critiqued for having too many options. And I appreciate from an advisor point of view, it sometimes is quite difficult to try and see the wood for the trees, I suppose, and cut through all of that to find the most appropriate. However, using technology, you have a way, a portal like AdviceWise, you have a way of filtering out a number of different products until you can hone in on the specific one that's most appropriate. The more choices you have as a product, the more appropriate that will be for the consumer. So yeah, we have a number of products, and most of the companies in this marketplace have a vast array of different products suitable for individual circumstances.
So that brings me on the ability to service it, which I quite like.
Yeah.
But you do have four levels. So, why so many variations?
I'm glad you asked that, Jane, because we are simplifying that. Yeah, we brought out the innovation of interest servicing. Well, in itself, interest servicing isn't necessarily new, but the way that we did it, as far as our product features are concerned, it was new. So we rewarded the amount of interest that people were servicing. And we brought out four different levels. So if you paid £25, you would actually still get and as little as £25, you would still get a rate discount or a rate reward for servicing that all the way up to 100% of the interest. But I think you're probably right. We could simplify that, and we have simplified that. So now there will only be two different levels, and you will get a 20 basis points rate reduction for everything you service over 25% of that interest. So we have opened that up. We have given more rewards for those who don't necessarily want to service it all, but have some surplus income and can service some. We know from feedback from advisors and from people like yourself, Jane, is that some people have surplus income, but they don't seem to be willing to use some of that surplus income. And we would like for the market to say, well, if you're an advisor and you're actually offering some advice and a recommendation to a client, if there is surplus income, why don't you try and improve the actual outcome, which would be a rate reduction, which will manifest itself out into a very big saving in the overall cost of borrowing in the long run. So we're trying to challenge consumer behavior there by saying, well, if you want to play in this space, we'll actually reward you for doing so. So it's another innovation that we've learned from ourselves, and we have simplified. So there's now only two levels of rate reduction that you will get for servicing interest with us.
Well, I'm really pleased to hear that, because I actually did have a look at your products, and you currently have 170 products covering the J1 to J4 and
Yes.
another 40 on the J5. So yes, that's music to my ears. A question that one of our members raised actually is, why not allow the direct debit interest only and the ability to top up to the 10%?
Yeah. Um, Yeah, that's an interesting point. I think what we wanted to do is we wanted to say, okay, from outset, and if you have a look at it, it's probably more aimed at those interest only clients that are in an interest only mortgage right now, and don't have the vehicle to repay or have to do something because they have no other routes of access. So I suppose we're looking at people that already have experience of making a debt repayment. So that's the first thing. The second thing is if you set that up from day one and you know you're going to get a reward for doing so, then you're more likely to continue doing so. So I think that's why we don't do the direct debit and set that up. We would rather say, okay, this is part of the structure of the loan, and if you want to play in this space, then we'll actually reward you for all the time you are doing that. But it is important to add, actually, if you want to stop making those payments, you can. You can have payment holidays. You can have 3 consecutive months payment holidays per year. So there are other options. We're not forcing you to make that for the continued life of that policy. We would just like you to have the discipline. And I think that's probably the right word. We don't really want to tell consumers off, but we want to say, look, if you've got the discipline of doing it, we will reward you for doing so for as long as you are comfortable doing it.
Thank you. So that's interesting. Yes, and very good point and well noted. So how do you find your current book on sort of an overview on the payers, the roll up, and the interest only and the 10%?
Okay, so we've had interest servicing on our book for since the start of 2019, and it currently makes up approximately 15% of everything we see. So it's a significant amount of what we do, and it is growing. So I think as advisors are starting to understand the real true benefit of the servicing the interest, we've seen a lot of scrutiny from the FCA. There was a recent FCA review, and one of the parts of that was, I suppose, challenging consumers more to do something with any identified surplus income. Now, what we've done with the product, and bear in mind, our product came out before the FCA review, is it not only ticks that box and allows consumers and advisors to utilize surplus income, but it rewards it. So you can really see a tangible benefit. So that's the first thing. I suppose the second thing on that is it's continually growing, and we are seeing that more in different cohorts of financial services. So where we have, I suppose, what traditionally would be high net worth IFAs are more attuned to this kind of clients with more surplus income. So we're starting to get real traction in different areas of the market that we weren't expecting to, and I suppose a little bit of a move away from the traditional lifetime mortgage clients themselves.
So do you think having such a large range, this has allowed you to monitor the market, and that going forward it will help you tailor your products accordingly?
We are continually looking for feedback on our products, not about our competitive positioning, but how many people we can help, and are they doing the things that we want them to. So we have a really good team at Just who will monitor what inquiries we have, and the features that are in the marketplace and what is right for the consumer. I mean, all lenders have an obligation to make sure that their products are fit for purpose and that are relevant for their customer base. And we are no different. I would like to think that we probably monitor and adapt more than most. You will have known yourself we are obviously, we're still in a COVID environment, but at the very start of the lockdown and the COVID environment, as things changed really quickly, I'd like to think that we were one of the first to make changes to what we did to ensure that we were still able to continue servicing our advisors and actually helping the consumer out. So yes, I do think we're well known for keeping on top of making sure our products are still the right thing for advisors and their customers.
Well, thank you very much, Matt. That was very, very informative. So thank you, and thank you for that. Please keep your questions coming through the website or just a quick phone call away. I hope you enjoy using our system. Just remember, we're green too. So for every KFI, we will plant a tree that goes through our system. Thank you. Goodbye.